Happy Friday, everyone. It's 9:01 a.m. Chicago, U.S. Eastern U.S. time. It is the 22nd of September, 2017. Again, happy Friday. This is another Trader Bite, early nourishment for your trading mind. The goal, of course, of these Trader Bites is to stay connected with you, but also to provide the community, the online trading community, with a consistent and repetitive, not repetitive, but more systematic approach to the market. I do not offer trading advice. I'm not telling you how to trade, at least not here. But the goal here is to get you to think the same way, to approach the market in the same way every day, and to build on that with your own touches. Anyway, derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market is selling off a little bit. Market's moving to safety. That's the capital allocation this morning. Looks like the NASDAQ is the laggard. We've got the NASDAQ off almost 22 points, trading at 59.2350 or so, down 0.37%, followed by the US dollar, the S&P minis, and the Dow Jones. The gainers today is gasoline, RBOB. The October contracts trading at 166.14, $1.6614, up 1%, followed by the Japanese yen, the euro, the bond, and gold. And then the other product I track that is up for the day is the US 10-year. This squarely tells us that allocation is to safety. Now, the way we finished yesterday's trading gives us was setting us up for a break higher, at least when I was speaking live on the Bookmap webinar. And then the market kind of slouched and slumped and went sideways from there. It wasn't able to break 2504.50 in the S&P or 2496.50, which occurs about 3% of the days tested, about 1,500 days going back February of this year and backwards. It is hard for this product not to break either the high of the first hour or the low of the first hour. Looks like we're buffering again this morning. It's unbelievable. And so we looked like we were about to head up, head higher. I'll go over that here in a minute. But news came in after the close yesterday, where our buddy over there in North Korea has announced that their countermeasures to the comments made by President Trump at the UN, their countermeasure will likely be an H-bomb test in the Pacific. An H-bomb test in the Pacific that gave the market jitters and has caused us to sell off since then. So the auction, as of right now, As of right now, the auction has been interrupted. Okay, I have a lot of distractions on my screen. I need to focus. Anyway, so that's how things are shaping up. Not too much more to report there. As far as what we're looking for today, at 9:45 Eastern, we're looking for the prelim on U.S. manufacturing PMI for September, looking for 53. This can be a mover. We're also going to get the services PMI, expecting 55.7 there. And then that's pretty much it. We're getting some speakers this afternoon. We had a bunch this morning. Constancio speaks again at 8:15. He's with the ECB, speaking at a panel in Frankfurt. Also at 9:30 Eastern, we have Fed Speaker George, and at 1:30 Eastern, we get Fed Speaker Kaplan. That's how things are shaping up. Let's take a look at what we expected yesterday. Yesterday, way off on the hypothesis. Things were building up in a really decent way for the expectation. Yesterday, we were looking for the market to just go completely sideways, and consolidate pretty tight into the in the morning, and then I was looking for it to break higher. This is driven by what the market has done over the last few days, and mainly driven by where the auction had been interrupted by the end of the session on Wednesday. And so, under normal circumstances, I'd give this a very high probability that we would go sideways opening in range and value, and likely to break higher given the weak high and the way we finished Wednesday afternoon. That did not work at all. Instead, we got something that kind of looked like Hypo 2. We didn't manage to get to the VPOC, but we ended up dropping and then pushing higher later on. So Hypo 2 was more in play, but really it wasn't clean. Like I said, I don't want to be a whiner or anything, but like I said, it's not entirely overall. It's not entirely a clean trade, right? We don't have the volatility to make it into a clean trade where the auction is actually following standard rotations, standard market discovery. So that's where we are. Let's see, sizing pains. Let's do 67%. That's where we are. Yesterday, for those of you who attended the webinar, I talked while the webinar, I was setting up a trade right there, and I had talked about it pushing higher, pulling back, and then pushing higher and taking out that IB high. If you didn't watch the webinar, it is the recording is listed in the description of this video. You can watch it there, but I talked about it likely breaking up again. This is the 97% probability, historic probability, okay, that we would break the IB high or low at some point in the session. Those are the yellow lines. We're likely to break one or the other at some point in the session, and we didn't do that yesterday. And that's what's called a normal day. It's a misnomer, in my opinion, by Pete Stadelmeyer, but it's considered a normal day. The most common type of day is a normal variation, which means we break either the high or the low, but only one of those, and we push through before we fall back in or stay outside of the IB, but we only break one side. Those are the most common days. Normal days occur only about 3% in the S&P. 0% according to my research in the Russell, but I need to check those numbers. Anyway, so that's how we ended up. We ended up on an inside day. We didn't accomplish anything yesterday except to build this boxy profile with a very quick drop off on either extreme. It seemed like participation was mostly in the middle. Yesterday, in my opinion, did not inform us other than to say we're okay with a range between 2503 and 2500. We're okay with that range and holding steady. This morning, we're trading right now at 2494.75, below yesterday's range. The overnight low was 24.92, which took out that 24.94 low we put in on Wednesday. That's the FOMC low. Let's look at the overnight session. There it is. We opened sideways just as normal, and that news started to come in, and the market went into a sell-off here, and we had an impulse down, a tight consolidation continuation, and then we're in a correction. So the standard kind of pattern is developing, in my opinion. So that's how things look right now. But we're still inside of Wednesday's range, the FOMC range. Very hard to predict this morning which side takes over. This is a news-based event. Remember, we had ICBMs flying over Japan, which caused the market to sell off and then come right back. We're at new all-time highs. We've had many things happen that caused the market to sell off and come all the way back. I don't see how this is very different. I would love to see us sell off and kind of have a bit of a spring cleaning and take away some of this comfort that the market has with trading sideways. Extending this profile, you could see that we're building a fair amount of acceptance and resistance initially above. And so right now, 2504.75, 2504.75 is initial resistance on the way up. I expect that if the market gets there, it's likely to get caught in the weeds and in the tall grass and essentially trade sideways up there on initially. This morning, well, let's take a quick look at what we've accomplished for the week, right? Let's close this. We don't need this. And we don't need this. This is the Russell. Actually, I was planning to talk to you a little bit about the Russell. Where is my weekly profile? There it is. These windows constantly change depending on when I restart the computer, I guess. But here's what we accomplished this week, right? So we stayed above the 24.94 MC point of control, which was tested by a tick, less a tick on the FOMC. And we are back here trading at that low. We've spent all week higher, building again almost a P shape. I talked about this before. Acceptance is very, very clear in the 2500 to 2505 range or so. 2504.75 is the point of control. And the market's trading below it this morning. I expect the market to get attracted back up into that range, and I expect it to continue in what it's doing. The caveat to that is that it is Friday, and we're likely to square up ahead. We're likely to see bigger players square up ahead of the weekend following the FOMC. This morning, the primary hypothesis is an open auction. Respond, push into 2,500, find resistance initially, fall, and hold sideways, and then looking for the closing range to push us back down to 24.94 and potentially lower. So overall, I'm looking for this overnight low to break at some point. I'm not expecting this to be responsive too much. I expect it to be responsive early, and I expect that to fail. That's the primary hypothesis given the way we're set up. Otherwise, we are likely to open in an open auction out of range, test that 24.94, push through, hold, and then have one of our late rallies as we've seen often. So a late rally takes out the overnight low. The extended target becomes 25.01 quarter. Probably not going to get that. That's about 11 points. We're likely to go fairly dead early on. Those are the two primary hypotheses. Another thing I want to discuss with you, other than the fact that it is Like Friday, and I need you to hit the like button today. Very important that you hit the like button before you leave today. If you don't see the thumbs up button somewhere on your screen, find the YouTube link icon, click on it, go to that video, and hit the like button, please. I would appreciate if you did that. The other thing I want to discuss with you guys as a group is, why does this say ES? Should say RTY. Is the Russell. So I'm trading the Russell more and more. I see it as a very good product to find setups in. So I'm going to be covering it more and more in the morning sessions and talk about it. I feel more comfortable talking about the Russell than I do about crude, which I use as more of a scalping product. And now that the Russell's back in the CME, with the member, with the combined data, you don't have to pay 110 to ICE anymore a month to just get real-time data, which was absolutely ridiculous. At least now this is included in your market data subscription, and it's a very, very viable product to trade. So I'm going to be talking about it more and more. This is In addition, since I'm cutting out a lot from the beginning of the broadcast, there will be less and less news, and I'm going to cover events less and less. And I'm going to talk more about the S&P and split and create the hypotheses for the Russell as I do in the S&P. I'll also share some research, but I encourage you to do your own research into whatever product you're trading, and not to take what I tell you at face value. So we'll talk about the Russell more and more. The volume on it is equivalent to what's on ICE. It is ready to go. Anyway, I'll leave you with that. Again, please hit the like button as you head out. Remember, it's Friday. Don't go home with a big hole in your pocket today. Be patient and be safe. Have a great weekend. I'll catch you on Monday. Take care.